Wanted to start on some of the fears about the coronavirus. Ride sharing in particular has been under pressure, given it's so easily transmitted. What economic impacts have you seen on your business?
Well, we are obviously very closely monitoring the situation, and it is a situation that is evolving now, it seems, hour by hour. For us, though, unlike China and Greater China, which has seen the brunt of the outbreak, Southeast Asia has been largely untouched by the outbreak. Having said that, safety, of course, is of primary importance to us, and we are working with the government and the regulators to prepare contingency plans in the event that we need to take action. So everything from contact tracing, where we'll be able to notify the government of interactions between drivers and passengers, to preparing enough face masks for our driver population.
I want to switch to some of the fundamentals of the business over there. You're trying to become a super app, going into insurance and lending. What sort of opportunities do you see in that market?
Thank you for the question. First of all, I think 2019 has been just an amazing year for us. It's been a year of execution. We are now the region's largest super app. Last year alone, we launched 9 new services, from on-demand video to online healthcare services. Today, we're the largest ride-sharing platform, the largest food delivery platform. And financial services last year was really a year of firsts. We launched the first micro-insurance products, the first numberless credit card, and we launched the first bid for a digital bank license in Singapore with our partners, Singtel. So 2019 was a very, very busy year for us. In 2020, we are very focused on 2 priorities. The first is continuing the profitable growth that we've seen in our core businesses. And then secondly, continuing to broaden out the portfolio of products that we offer in financial services. As a business, we are already profitable in some of our most mature verticals. But the key for us is to continue pushing on profitability. And the way we do that is really through our B2B platform, which is really the way that we think about our restaurant partners is as a real end-to-end partner. So not just a delivery provider, but now we're providing payment solutions, procurement solutions. We're helping provide financing to help them grow their business, advertising to help you reach your customers in a more effective way. And that engagement model is how we drive greater loyalty and greater engagement on our platform.
I just want to get a little more detail on your plans and financial services. You've just purchased Bento Invest and renamed that Grab Invest. You are, as you say, applying for one of Singapore's digital banking licenses. But what's next? Are you looking at applying for licenses in Malaysia and Indonesia as well?
So first of all, it's important to understand the context. The first 7 years of our company was about solving a gap in transportation. But when you speak to our customers, what we realize is there is also a very large gap in wealth management and the ability to retire. Our customers work very hard, but many of our customers still struggle to save enough capital to have a comfortable retirement. So our acquisition of Bento was all about how do you reinvent wealth management? How do you democratize the process of personal savings to a point where accessibility and affordability is no longer now restricted to just the very wealthy, but it's available to the mass market. And we think it's a very large market opportunity. Consumers in Southeast Asia hold over $2 trillion of assets, investable assets, yet the challenge is over 60% of that still sits in cash accounts that lose value over time because of inflation. So we see the wealth management opportunity as an opportunity to create new services, new products that is better than keeping your assets in just cash. The digital bank opportunity is also a very similar opportunity. When you talk to our customers, over 40% of our customers are unhappy with their current banking partners, whether it's very expensive fees, hidden fees. You go to bank branches and wait very long times for service. We want to make banking as simple as ordering a ride. And we're very proud to be partnered with Singtel. Between the two of us, our ecosystems, we cover and touch nearly every consumer, every small, medium enterprise in the nation. And with our footprint, we are very confident we can develop the lowest cost platform for banking.
Now, with Grab, questions, of course, always turn to, well, when are you going to go public? And you've said previously, well, when you become profitable, all sectors of the business, but to some degree is your hand being forced because under your agreement with Uber that you acquired in 2018, you've got to go public by 2023 or Uber can exercise cash redemption options. So how are you progressing down this path?
First of all, we're not announcing anything today about an IPO. We will, of course, the key focus is on doing what's right for the business. And right now, what is right for the business is focusing on our customers, continuing to broaden out our financial services portfolio, and continuing to develop our B2B platform. We're very blessed to have a very large support from the investment community really around the world and have a very healthy balance sheet. And so that will, again, allow us to just keep heads down on our business for now.
Quickly here, you've talked about risk profitable and profitable growth a few times here. How much of that is pressure from SoftBank given the collapse of WeWork and now this market sentiment shift to profitable growth?
We've been on this path for over the 2 years now. And so for us, it's really just continuing the path that we've been on for the last 2 years. We're glad that the overall market has recognized the need for profitability, and we think this is healthy for the overall market and for consumers.